The Hedgeless Horseman here. It's February the 9th, 2023. I thought I'd just do a video on, some thoughts about jurisdictions and how that plays a part and what kind of trade-offs one would expect to make. First of all, markets are, polar opposite to yesterday pretty much. Markets, broader stock markets are up, dollar is down, commodities, copper is up a lot, gold and silver pretty much even. So again, just another example. Yesterday it was doom and gloom, and it's like I get influenced by that as well, of course. The funny thing is, like, okay, I saw some juniors be in the red. I'm like, okay, I guess gold and silver is down today, flavor of the day. But metals I think they were actually up. Not everyone, but it's like, no real red day, but markets were down. So it's just so funny to me that how the markets are doing, the broader markets, that influences everything, absolutely everything. Even though it's like the commodities, including gold, which is kind of the antithesis of an intact financial system. So it's like one would think, obviously, that okay, if markets are crashing and people are running for the hills, it's like, the chaos metal probably is going to do well, and it did pretty well, I think. And still, it's like miners were down. Why? Because people weren't, feeling that. They get more influenced. That's the funny part. Even though you're not in a typical, stock or a blue chip stock or whatever, it still puts the mood a lot of time, especially if it's down. If it's risk off, people sell everything. If it's up, it's more like lately we haven't really seen any flood into junior miners except lithium, but it just goes to show that the mood and our feelings would typically change from day to day. If you only had a rule of like, I'm just gonna buy miners on down days, that alone would probably give you a lot of outperformance. Just sticking to that rule. Okay, everything's down today, I'm gonna buy some. Everything is up today, I'm gonna hold off buying. Because it's almost every other day it's down, and typically, you get obviously oftentimes a bit of a better price. Just to have a purchase 5% cheaper than yesterday. That might not sound like a lot, but it's like over the long term, that is a lot, especially if it's a good company. A 5% discount today could lead to 20% outperformance a year or two from now. It can have a huge impact. So just sticking to a rule like that could probably lead to very good benefits. Anyway, I also had a Lundin Mining presentation, or the Lundin Group, yesterday in Stockholm. And I own a few Lundin Group companies like Montage, Faraday, Copper, Fireweed Metals. Well, they are invested there at least. But they also have some, big success stories like Philo Mining, obviously Lundin Mining, and petroleum companies like Shamaran and IPC and yada yada. But it's like what got me thinking was because I also watched a presentation by one of the geos, Inflection Resources, and he made the comment that if you're looking for porphyry mines in Australia, his opinion is that there's only New South Wales, and he expanded on that, saying that he's been in the other countries, more exotic countries, etc., where people were looking for porphyry deposits. And to his point, he's like, there's porphyry deposits in other places in Australia, no doubt, but actual porphyry deposits that would become good mines, that's limited to New South Wales in Australia, in his opinion, and hence that's why he and Inflection Resources, that's where all their focus is. I mean, that's kind of an interesting thing. It's like, yeah, Australia is a tier 1 jurisdiction for sure. And there's, probably, I mean, you could probably find different types of deposits all over Australia. But there tends to be like some areas where, let's say, the good ones are for any particular type. And that's what I got from, listening to Lundin, because they were talking about, the success with Filo mining, NGX, which is drilling a target not far away from Filo del Sol. And they already have another big deposit there. They actually have 3 big deposits there in the Andes along the Chilean and Argentinian border. So it's like it's pretty obvious, and this is obviously not something new. It's like they're typically the really big copper porphyries are in South America along the Andes. Argentina, Chile, Peru, etc. They produce most of the world's copper, or a lot of it, and the largest copper mines are typically centered around South America. So the point there being like, okay, if sure there are copper porphyries in other places, like British Columbia has a lot of large copper porphyries as well. But I guess the takeaway for me was like, yeah, okay, if you want, let's say, the best deposits in each category, it's like you should really go to the areas where, for some reason, Mother Nature just endowed that area with a lot of, I mean, all the ingredients were there to form large deposits. It's like, with SK Mining, SK Creek, we know there's the highest grade VMS deposit is found there. So whatever happened there created the biggest or the highest grade VMS deposit. So that district obviously has ingredients to make very high grade VMS deposits. And for whatever reason, when we're talking big porphyries, economic porphyries, New South Wales is perhaps the only place in all of Australia to go to. So it's like, it might be, I wouldn't say pointless, but like maybe one should not try to, invest in juniors that are drilling for porphyries in any other place in Australia than New South Wales, because here, for whatever reason, all the ingredients were put in place for formation of large copper gold deposits. And also that got me thinking, like, okay, jurisdictions. And obviously Lundins, they are quite famous for, no guts, no glory. They have made very bold acquisitions, etc. I mean, just the fact that I think their Filo del Sol project at Filo Mining, I mean, I think that covers both Argentinian and Chilean ground. So it's like, from a, jurisdiction or geopolitical viewpoint, that looks incredibly difficult. Thankfully it's the Lundins, obviously, but it's like, I would think it would be hard. I mean, today I guess Chile and Argentina are not, they're not top tier jurisdictions, but they have a rich history of mining, obviously. But to have a deposit that's kind of split between them, I mean, just the negotiations between the countries, let's say you have to have 2 countries on board instead of 1. So obviously that brings a bit of complexity. Maybe that's why nobody's really, tested those targets for real before. So it's like, yeah, there was an opportunity because nobody could be bothered to jump into that situation. But anyway, they might be able to make it work. And, that's just where the giant copper porphyries are located, along that trend. I mean, you could wish that it would, be located in a tier 1 jurisdiction, obviously, but those are some of the trade-offs. And we know some who have the let's say game plans, like go where the ore is. It's like Congo with copper. Yeah, Friedland said they went to the Congo, and Ivanhoe Mines has, one of the largest copper deposits in the world, and it's like wide open, could probably be mined for who knows how long, because it's still, wide open. it's in the Congos. It's not in Canada. So again, it's like, hate it or love it, probably the best copper deposits are in Congo and South America. But then you also read articles like this one: miners face too many votes in emerging markets, Almo's CEO says, and he talks about the jurisdictional risk, and that Panama, of course, Quantum has had problems with Panama, and that emerging markets perhaps are a bit more unreliable when it comes to taxes, etc. They can change the rules, and like he is stated here, Alamos owns 2 gold mines in Canada and 1 in Mexico, where, quote, where you can actually go to sleep at night knowing your assets are secure. I mean, from an owner's perspective, you would want to find something that you would be able to harvest the fruit from, obviously. If you find a 30-year mine with a 30-year mine life, you would really want it to not get taken away from you. Because, I mean, if it gets taken away from you in the next 5 years, I mean, that's 5 out of 30 parts of your deposit that's, gets taken away. And obviously that's why, hey, I mean, Australia is one of few, and I guess New South Wales, like, okay, what is kind of special with New South Wales? Well, obviously, it's a tier 1 jurisdiction, it's Australia, and here you happen to actually thankfully have the potential to find giant copper gold porphyries. And K-days, I mean, it's just ridiculously large. And it's like a slide I saw from Newcrest, maybe that was like 6 months or 8 or 10, whatever. It's like KD provided more free cash flow to Newcrest in I think 2021 than all their other mines combined. And we're talking, it's like they have Lihir, which is a giant gold project. They have Brucejack, which they bought for $3 billion. They have Red Chris in British Columbia, which is a copper gold porphyry, and they're developing that still. So it's not fully fledged, let's say. But it's like, still, how much is that worth? One mine with I think decades left of mine life in Australia, which provides huge free cash flow. I mean, talk about a company maker. And the Lundins made that point. It's like BHP was founded on the Broken Hill deposit in Australia. That's where the name came from. And Rio Tinto apparently got it started at a Rio Tinto mine. And, you have, and Quinton has talked about the gold companies that, Barrick became Barrick from its, I guess it was their Gold Strike discovery, Giant Carlin system, and Newmont had the Giant Carlin mine, or it was flipped the other way. Anyway, point being is like giant mines in tier 1 jurisdictions became the foundation for the majors of today. So that's obviously worth a lot. But if you found a giant mine in, perhaps a much more sketchy jurisdiction, maybe you would never be able to really harvest all that fruit, let's say, which is obviously unfortunate. But anyway, so it's like some trade-offs. I mean, where can you... my point was... okay, if you're after copper, etc., it makes sense to go where the best copper deposits are. And they tend to be in South America. So you kind of have to take some jurisdictional risk there. But if I would take it, I mean, obviously Lundins are great stewards, let's say. They know how to work these jurisdictions. They made it work with Fruta del Norte in Ecuador, which, I mean, at the time nobody wanted to touch Ecuador. And now it's one of the best gold mines in the world. So typically there are trade-offs. Okay, if we want a giant deposit or whatever, we might need to go to a sketch jurisdiction, so you have that jurisdictional risk, yada, yada, yada. And it's like, I know some who say that, hey, Africa, people consider Africa to be a subpar jurisdiction. I mean, there's a bunch of different countries, obviously. But like some would, I mean, are not really interested in Africa, and it gets jurisdictional discount typically, almost regardless of, I mean, there are some countries in Africa that are really poor from a mining perspective, but there are some that are really, really good actually. Like Morocco is really good. It is second in the world from the policy perception, according to the Fraser Index. But again, yeah, some say it's like, no, Africa is where they would want to be because you can actually build mines there. So that's also the trade-offs. Like, okay, in some of the, let's say, emerging markets, some jurisdictions, it's much easier to build a mine. So that's actually a pro, obviously. And at the same time, in the West, in Tier 1, civilized, the most civilized countries in the world, the trade-off there typically is that, not in my backyard. That, okay, yes, I would, you found something in a really good jurisdiction, but they don't want any mines there. So you can't even monetize what you have, even though, you own what you have found, but you can't monetize it. So it's, kind of worthless. I mean, from that perspective, they would probably have it be in Africa in that case, because there they could actually build it. So it's just interesting the way, how complex investing is, because there's so many angles. It's like, yeah, we would want it where nobody will, let's say, steal it from us. But if I can permit it there, it's it's worth as much as somebody actually stole it. At least now, I mean, things always change. So I just thought that was a very interesting, thing to ponder, and that's why when I was thinking about that, it's just, again, I came back to like magna mining. Okay, first of all, critical metals, minerals, and magna has that, copper, nickel, and PGMs. I mean, I don't think they're considered critical, but still. So it's like, okay, what might be the hard part in the Western countries? Permitting. And that maybe those are not the places for good deposits in whatever category. What's unique with magna is obviously it's in Sudbury, which is a world-renowned nickel province. One of the largest nickel producers in history. They have some of the best mines in the world when it comes to nickel. So you actually have the thankful thing of this being a prime region or a prime location for actual nickel mines. I mean, it's not the trade-off that, yeah, at least it's in a tier 1 jurisdiction, but here there are not really, there are no world-class mines here. No, Sudbury actually has world-class mines, and it's a tier 1 jurisdiction. So then the typical thing is, okay, yeah, but would you actually be able to permit it? Because, in Canada and the US, there's so many NGOs, etc., so it's very hard to get permits. It take a long time. No, they actually have that covered with their produce being permitted. And they have the infrastructure, etc. So it's just remarkable the more I thought about it. It's like, yeah, magna is one of few that actually checks all the boxes. Tier 1 area, critical minerals as well. Tier 1 jurisdiction for sure. Sudbury is like a mining town in Canada, and they actually have the permits. So again, typically you might see, yes, we have a project in a tier 1 jurisdiction, but we can't get the permits, or it will take a long time to get the permits. Or, yeah, it's in a tier 1 jurisdiction, but these are not where the best type of deposits for each category typically are located. Yeah, we found, let's say, a small copper porphyry, which is kind of low grade, etc., because it's not in Chile or Argentina where the large ones are. But in Magna's case, you actually have all that covered. So it might be the only junior I know of which basically pretty much checks every single box I could think of. Jurisdiction, location, infrastructure, team, and they have the permits. and it's where, you know, world-class nickel mines are. So it's just, yeah, it's pretty remarkable. That's why I think Magna is kind of unique, and probably, yeah, the best case I've seen in the last 7 years, and I would say still is, even though it's gone up a bit, but it's like not even close to being overvalued. It's not even fairly priced, simply because of all the things I just said. I mean, it really ticks all the boxes, and it's not trading like it has all of those boxes ticked. I mean, it's trading below peer average. It's just crazy how cheap it is, given how de-risked it is, and that it actually is not only a, you know, a de-risked crap project. No, these are, I mean, the Green Hill mine stacks up to pretty much any Sudbury mine in the hands of majors. So now it's just incredible. And it's like, yeah, Western Alaska, I got to thinking about that when I watched the Reina Silver private placement, which I am participating in. You know, their GUI project, I think it's the GUI project. They go over the fact that Santa Eulalia is one of the, you know, a world-class district, produced, I think, over 500 million ounces of silver, and obviously a bunch of lead and zinc mined for I don't know how long, but that's like, you know, world-class asset, CRD. And they're looking for the deeper extensions of that. So it's not, the story might, you know, it's not over, because these are the CRD is actually the fringe parts of a larger system, and then you have, I don't know if they have the actual schematic how. Oh, okay, but typically it's like, yeah, porphyry source, then you have skarn mineralization, and then you get into CRD mineralization. So the idea here, for example, is well, here, for example, I guess, well, porphyry copper zonation patterns. Yeah, they don't show the whole shebang. This is Santa Eulalia. Anyways, like, the idea is that these CRD systems, or a big CRD system is like, you know, a decade long, I mean, world-class. It's kind of a district in itself, because, you know, obviously they are so large, so high grade, and there might be both CRD, which again is like the distal parts of this system, and then you might be reaching, you know, skarn or something, and then there might be a big porphyry. And on that note, it's like that's the funny part, like Reina Silver, they are exploring for the extensions of this world-class district. So meaning that, you know, they believe there's actually a price after a big price has already been mined. And the Tintic district in Utah, this is where Ivanhoe Electric is trying to find a copper porphyry source to this district. So, like, just think about it. I mean, the CRD itself in both these camps were world-class systems, like long-lived company-making systems if you owned it all. And this is the same scale here. So perhaps, I mean, think about this, like why I like Western Alaska. This might be a whole, you know, CRD district, and it might have skarn, and it might actually have a porphyry at the end of the day, and maybe each of those deposits, zonations, are a big price in itself. So this could literally be, you know, a real, yeah, since it could actually, it has the potential, until further notice, of being one of these world-class districts, and it's in Alaska as well. And, you know, it used to be the Illinois Creek mine is a past producer, etc. I mean, just got me thinking, like, okay, where do you go to find these, you know, perhaps category killer deposits and mines? And then you have to be kind of lucky to, well, I shouldn't say lucky, but can you find it in a good jurisdiction as well? I mean, if you can combine those things, I mean, think about how rare that is. I made a post in the Magna forum today. It's like, nickel is rare. We know that nickel is very rare. There are not many nickel discoveries being made, at least of any quality. A nickel discovery or nickel deposit in a tier 1 jurisdiction is rarer still, and it's even rarer to have the infrastructure and be, you know, in a place like Sudbury, and to have permits and a superb management team. I mean, there's literally, it's like what Jason said, we don't have any peers. I mean, that's how rare a case like Magna Mining is. It basically checks all the boxes. And again, it's like Inflection Resource. Okay, you like copper and gold. You like copper, gold, porphyry potential. Okay, where do you go to find big ones like this? I mean, there's places in the US, obviously in British Columbia, and we know about Chile, Argentina, and Peru, for example. But those are not tier 1 jurisdictions, obviously. So this is one of, I mean, according to one of their geos, this is the only place in all of Australia where you can actually, where there's real potential to not find only a porphyry, but like a mine, a porphyry mine, as evidenced by Koval, North Parks, Cadia, etc., which are all three very large mines. Now it just got me thinking, like, okay, where do you go to find, you know, let's say potential category killers? Yes, you could obviously, like the Londinus showed, you can go to Argentina and Chile where they are. I mean, for whatever reason, there is where large deposits are formed in copper porphyry types. But those are not tier 1 jurisdictions, so there's always that trade-off. And of course, I mean, Inflection Resources doesn't have a deposit, you know, they don't really have a discovery yet. But it's just one of those things. I mean, there might be no other place on Earth except for a few locations in US and British Columbia where you have the potential of having a, you know, significant porphyry discovery and it being in a tier 1 jurisdiction. Yeah, so it's just interesting when you think about, like, there's typically trade-offs, like Montage Gold which is Lundin backed, Ivory Coast. Africa, again, from a permitting perspective and actually being able to put a mine into production, a lot of those jurisdictions are really good. And from a, you know, will you get to keep the fruits of your labor? That could be more iffy, especially the longer timeline you have, perhaps. But there's not too many that check all the boxes, because again, if you're in Australia, the good thing about Australia obviously is, I mean, this is kind of sparsely populated areas, because there's like 26 million. You know, population-wise in all of Australia, which is a huge continent. So that's very good, obviously, because if you're in other places of Western countries, I mean, it's much more densely populated, and you might run into more permitting problems. And that's again why I think like Magna is so unique. They are in a tier 1 jurisdiction where typically permitting is probably the biggest challenge. And they have the permits. So like that is the fascinating thing. It's like, yes, you can, let's say you permit a mine in Africa, that's still not going to become a tier 1 jurisdiction. So there's no, not really an if and when there, at least in the short time frame. But in the tier 1 jurisdictions, we know they're tier 1 jurisdictions. But with that said, some mostly thanks to permitting hurdles, they don't think, you know, tier 1 jurisdictions are that great, because we saw a copper project in, what was it, Alaska or something, that they got an okay to build a road, and then the US government or whatever agency basically tore that up. So all of a sudden they don't have a mine road. They don't have the permits for a mine road. So that's where it's like, yes, that is the trade-off. You know you will get to keep the project, but you don't know if you will get to build the project. Whereas in Africa and some other South American countries, you might have an easier time actually monetizing the asset. It's just that we don't know if what you're monetizing, if you will get to keep that, at least forever. So yeah, I guess this the idea behind this video is just showing you, how many factors there are to consider, and why, again, I think there are while this sector is cheap overall, there's cases that are maybe 1000% better than other cases, even though both might be cheap, etc. So I think, really, I can't stress enough how unique I think Magna is. And why I think it's just, ridiculously priced. It's like somebody said, people start to appreciate the value of permits when they've lost money on a project that wasn't able to get permitted. And we saw that in Rio too, for example. They got a no on some environmental thing and that stock crashed. So even though they have a big gold mine in, I think it's Chile, that stock has crashed, and we have no idea, how long that's going to take. If it, will it ever be able to get monetized? And if not, that's dead in the water until something changes. So there you can see the value of permits, and that was even, in the more typically more mining friendly, emerging markets jurisdictions. And it's probably oftentimes even harder in many of the tier 1 jurisdictions. But you can't make Chile to a tier 1 jurisdiction. So if you are in a tier 1 jurisdiction where permitting would be the main hurdle, and you actually have the permits, just think about how much that is actually worth from a de-risking standpoint. It's just incredible. To be, as a shareholder, you're part owner of probably the only 2 fully permitted projects belonging to a junior in all of North America that's got nickel and copper. We are in a prime seat, really. From that perspective, it's just, nobody is as advanced as Magna. No junior is as de-risked as Magna. And it just happens to, again, be in a tier 1 jurisdiction in Sudbury of all places. It's just, in my opinion, incredible. I think Magna is orders of magnitudes better than the average junior. And I think the case is also orders of magnitude better, because it's not, the current price is not reflecting all the intrinsic value of how the de-risked Magna is and how good their actual deposits are. So this is, my largest position still. And the more I think about it, the more I think about jurisdictional trade-offs, what you typically see. Again, it's like, if you're in a tier 1 jurisdiction, you might not have the, world-class ore body potential, or you might never, any, let's say, acceptable time frame, you won't get permits. Whereas if you're in emerging markets, permitting might be easier. It's just that, those are not tier 1 jurisdictions, so you don't really know. A coup could happen. You could have a problem getting your money out, etc. at some point in time, all of that. So those are the trade-offs. It's like, because there are a lot of emerging market countries where there are world-class deposits. And again, if you want to look for copper giants, the Andes are one of the few places to be. It's just you will have that chronic jurisdictional risk. So it's always trade-offs. And on that point, it's like the most important thing is what we pay. I'm okay with jurisdictional risk if I get paid even more in case it doesn't materialize. And that's typically why people are okay to pay premiums on tier 1 jurisdictions and permits, etc. Because there's a higher margin of safety. They won't get that project taken away from them, so they are willing to put a premium on those products relative to the places where you might get their assets stolen, for example. So, I mean, Magna should really trade with a premium to peers. It's trading at a discount still. So it's like, I think this revaluation train has just started, and it's going to take some time because a lot of people still don't really talk about Magna, and again, they're like peerless. Anyway, I hope I shed some light. It's like on, well, I guess jurisdictional trade-offs, and it's like to remind myself that don't go, if you want potential category killers, etc., especially if you're going big, it's like bet on companies where there are proven to be category killing deposits that have been found already. And it's like, again, according to one of Inflection Resources, Geo's, like he wouldn't bother looking for porphyries in any other place in all of Australia than the Macquarie Arc, simply because he believes that this is the only area where all the ingredients were present that allow the formation of actual, porphyry mines, meaning big scale, high quality. Even though there might be other areas with, porphyry bodies, but not really the type of category killer potential which is here. So, I mean, if you're taking a high risk, high reward bet, obviously you would want the reward side to be the highest possible, and that means largest, highest quality, and if you're in a tier 1 jurisdiction, you get a premium on that. So if this, same market cap as Inflection Resources has, imagine if they were looking for porphyries in Ecuador, where there's no evidence of any, large porphyries being found. I'm just, taking that as an example. I don't know. I think Ecuador is porphyry potential because it's, South America along the Andes, but maybe a poor example, but I hope you know what I mean. It's like if you say a junior that's looking for porphyries where there's not even been any discoveries, so especially any major mine potential porphyries with mine potential, I mean that's you're probably just throwing away money in that case, because you won't get a jurisdictional premium either. So there's like no evidence that there's even potential for something large enough to actually become a world-class mine. And if you do, you'll have a jurisdictional discount to boot. So again, it's like you might see juniors trade at equal market caps. You have 20 juniors, they have 10 to 15 million dollars in market caps, but the actual risk reward and the opportunities might be, in my opinion, like a 1000% in difference. One might be a clear sell at 10 million, but the market says that, hey, this is worth 10 million. And another company that's worth 10 million, the market is, if you believe the market is always right, they would say, hey, those are equally good opportunities. What they have, all the ingredients those juniors have all a fair value of 10 million. I don't buy that for a second, because the market is, especially the junior sector driven by retail, is absolutely not that rational. Absolutely not. So it's like, yes, sometimes we're wrong, etc. But if you think the market is totally off on some junior, let's say you own 10 and you think, hey, the market is totally clueless about these 10 juniors, even if the market is, quote, right on 3 of them, but you are right on 7 of them, I mean, that's enough. So it's like, we don't need 100% hit rate. So I think it's better to assume that the market knows nothing. And if you have a bold idea of like, yeah, I think this is actually worth a lot more, or the price is too low for the potential in this junior or whatever. You don't need to get everyone right, but if you can find a few where you're like, yeah, I think the market is absolutely clueless. So I mean, if you're totally wrong on all of them, that would be bad, obviously. But the worst case in that case is, I mean, when you think about it, according to theory, if the market is always right, that means I'm I'm at worst paying a fair price for all. And best case, I am right and the market is totally wrong. That is the interesting thing, which people seem to forget. It's like, yeah, okay, if you believe the market is right, nobody by definition is making a mistake. Because you're always paying the fair market price. But I don't believe that, and I think the market is totally clueless sometimes. And in that case, you have to have the conviction, and that comes from due diligence, etc. To like, yeah, you know, in my opinion, my bold prediction is that Magna Mining is just incredibly undervalued. Mr. Market is not reflecting how valuable this combination is. That's my bet. And so far that has worked out well. And I think it's not even, you know, fairly priced yet. So I think there's, I think Mr. Market will have to reward us more before Mr. Market gets it right. That's what I think. Anyway, consider me biased. I own shares of all companies mentioned, or at least all the companies I mentioned I own. And Magna and Magna and Inflection Resources and Western Alaska are banner sponsors. So do your own due diligence. This is not investing advice. I don't share your profits or your losses. Yeah, take care. Don't invest money you cannot afford to lose. Bye.